Hey fam, it's a quick 5-minute video just showing you what I look at when I see a chart, how to read it, and how to draw your support, resistance, fib extensions, right? So this is going to be a quick run through. All right. So this is the chart for Shiba Inu. So what am I looking at on this big chart here? All right. So along here, I don't know if you can see my cursor moving. You should. Along here is just a watch list. These are just ticker codes. So it's just like the code for each coin, just what I'm looking at here. It's just a little watch list. So this is the chart for Shiba Inu. So what do you see straight away? Straight away, you can see, okay, it's got the title here. These are a bunch of tools. What else we got? Down here is just an RSI. It's just a relative strength index of each move. Just shows you if it's above this line here, this dotted line, then it's going into overbought territory. If it's on the bottom, it's oversold. Okay, so here, this is just the volume. So this is just the amount that people are buying or selling. This golden line here is just an average. So if it's anything above that, it means that you've got a big move either way, down or up. As you can see, if you correlate each of them, it's usually been to the upside. So if I take off all these indicators here, I'll redraw them in a second, right? But what I've got is pretty simply these two red lines I put in, they're both just support. So support is just the floor price. If it breaks support, price falls below, I wouldn't be touching it. I'd be straight out. It's sort of like your safeguard on this red line here. Okay, so let me just take it off for a sec. So if we just have a clean chart here with nothing on it, okay, if I was to redraw it again, what am I looking at? So this is just a clean chart. So this orange line here is an EMA, it's just an exponential moving average, just takes an average of the overall price. I use a 43 EMA. I've just seen a lot of ASX traders use the same. Some people use like a 10, 20, 50, and then a 200. It's completely up to you. Honestly, I like it simple. I don't want too much shit on the screen. I don't want to get bombarded with too many things. And honestly, too many and you'll start making little decisions like, oh, but it could go here, and you'll fuck it. Honestly, just use the one personally. So I use a 43. Anything below, it's a little bit oversold. Anything above, like how you have a big deviation between here and here, that's way overbought. I'd be wanting to take profits if I see something like this going on. So if I look at this chart clean, I use a trend line, which is here, and I just go down. A lot of people go wick to wick. So from the top of the wick to like the bottom here. I don't like fake outs. So, you know, you could go from like, some people could do this, right? You could go from the top to the top of this wick here. You always go from the last one and you go straight down. And that works, it actually does. If you zoom in, you'll see, where did it retest? So you see here, how at the bottom of the wick bounces straight off of this trend line. That's a good sign. It means it's gone up, it's retested. So now you flipped. So your resistance, which is purple, it was resistance here. That was the roof, kept hitting it and going down. When it flips and closes above, now it's support, which is good. So that means that this is like its new base and you can keep building higher from there. So that's a good sign. Personally, I don't like that. You can actually get a little bit earlier if I go just from the close of the candle and I hug it all the way to the other closes. And it sort of works the same, but this way you'll get in moves quicker. So like you could have got it as soon as it broke above here, you could have gone in when the body of the candle closes above. See, if you go along the line, it's just got wicks and then they come back down. Something like that, a full body that closed above. So now you flip resistance to support. That's huge. You could have got in earlier, but personally, I'll wait for a close and I'll wait for like a bit of a retest. So if I rebalance, it's honestly right here. That's like a perfect test. And that green line is my personal entry. You could have got in lower, but whatever. So now what do you do from here? So if you want price targets of where you think it's going to go, the best one to use is a fib extension, which, so you go start of the impulse, top of the impulse, and to the bottom. And I use the wicks for this. Okay, so now you get your price targets using a Fibonacci extension, right? So I highlighted the golden ratios, the 0.618 and the 1.618. Again, I don't understand how the fuck fibs work, but it just does. So then you put in profit and loss on your long position. I click it onto where I entered. Bang. Okay. So now it's up to you how much you're willing to risk. I wouldn't go anything below the wick of that retest, which is 6%. So I'm willing to risk 6% of my entry in the hopes to gain about 60%, which is this first golden ratio here. Or if you want to call it a price, it's about, I don't know how many fucking zeros that is, but whatever, 7.3 cents or whatever. So that would be one place to take profit right here. And I'm not saying like specific investment advice or whatever. I'm just saying for a fib extension, this is how it would work. And if it was looking real good, if you get a lot of volume that comes through, then you'd be looking for this one here, 1.618, which is about 160%. Oh, fuck me, even more, 188%, which is pretty sick. Yeah, so 188%, what's that? If you put in 10 grand, that's what, 18 grand profit, not bad. And that's, if I zoom out now, this is all that I did to get a target, and this is all you'd be looking for. Now, something like this is going to take a few days. This is a daily chart. So each of these candles represents one day. And as you can see, it didn't go down in one day, so it's not going to go back up in one day. But usually a move like this, when you've been waiting for since 27th of October, it didn't break till the 29th. So that's 1 month. Usually it gets pretty explosive when it does break because people have been waiting for such a long time. So if you see down here, if you see like a big spike in volume down here, like something like this, then fuck, yeah, it really could be reaching this area here. Or when it's just like a dog shit pattern. This is like probably the easiest pattern you could hope for, and honestly the easiest to trade because it's very simple. It's a very simple bullish uptrend move. Honestly, doesn't get much better than this. So that's fib trading. That's one way you can do it. Or you can just go, so if I get my trend line tool out, I draw it from the bottom and I go straight up. Okay, now that's a parabolic move, obviously, and it's probably going to break and sort of dip down and whatever, and you'll get like a cleaner look. But if it was to start going parabolic, then if it breaks this, so like you get something, a price movement, something like this, how it starts bouncing, going up, bouncing, boom, goes up to here, breaks, bang, there's your exit. Get out straight away. Because this line would become, that would become your new support. Every time it bounces on it, it's like its new floor for the price. Second it breaks, especially when you're already up a fair bit, that's it, there's your sell. It could even do something like, come down a bit, sort of bounce here, and then start working its way back up. Absolutely. But no one knows how low it goes from here, especially when you get a break like that. So you're better off just taking at least some profits on the first break, whatever. If you start seeing it bottom out a little bit, then sure, add some more around here and send it off again. Otherwise, like it could break here and it could just go straight down. You don't know. So there's two ways of doing it. Either it hits your fib target, you'd sell, or if it breaks your support line, you'd sell as well. That's how you take profit.